Welcome back to the What You Want More podcast. I'm your host, Quinton Harris, and we're back for episode 139 and 140 in this two-part series of the February lending update, where we're going to talk about grants in this area and what's available, home equity lines, second mortgages. We're going to talk about how to get the best rate on your mortgage, kind of recap an episode that Daniel Halvorsen did, but give you some information and some links and how you can get more information on that. And then we're going to break that second part up into the infamous inflation rate hike and the head fake that went along with that. It's going to be a jam-packed 2 episodes. Welcome, Daniel Halvorsen, to the show, and thanks for being on here and giving us all your expertise, advice, and spending a little time with us this afternoon.
Yeah, man, I'm excited to talk about cool stuff in the first half, and then we'll talk about the same thing we talk about every time, second half.
Yeah, exactly. But at some point, we're going to get it right. At some point, it's going to, you can only go up for so long and things are going to happen the right way. So let's start with some of these grants here. More programs coming out from the Federal Home Loan Bank. Let's talk about what is the Federal Home Loan Bank and why banks kind of use that term a lot, and explain to our audience what that is, and then how we're getting access to this money, this grant money.
Well, I'll let you speak a little bit on the Federal Home Loan Bank side, but from our standpoint, essentially what it is, it's a forgivable grant, down payment assistance program, and within Florida Housing, this is not a Florida Housing product, but within Florida Housing, there are grant programs available. This would be completely separate from that. But the nice part about the grant, it is forgiven if you stay in the home for 5 years. And this program is essentially current market interest rates. So they're not predetermined by the Florida Housing Agency. So depending on where rates are at that particular moment in time, along with this particular buyer's qualifications, they may find themselves in a situation where they get a more favorable interest rate than they could on some other down payment assistance programs.
Right. And this could be done in any state, not just Florida.
Correct.
Like this is a Federal Home Loan Bank product. I'll speak to that briefly in just a second, but just for audience, sometimes we talk about Florida, sometimes we talk about specific states. This is nationwide.
Correct.
So, so before we get into the details of that, just for our audience, Federal Home Loan Bank, what that means is it's not a separate bank. Every bank in the United States has a division of the Federal Home Loan Bank they go to. It's almost like their version of the Federal Reserve, right? It's where they go get their money from, their special lending products from, and just additional funds to lend when they need it. So every bank has a region for the Federal Reserves. Ours happens to be in Dallas. Sometimes there's one in Atlanta, et cetera, Chicago. You get the point. But it's just like a lender of last resort, essentially, for banks to go to get money when they need it, especially for lending.
Cool. Yeah. So just to kind of highlight this, the assistance amount is $20,000, and it is not dependent on purchase price, loan amount, like a lot of the other programs that we talk about. So it's a grant program, $20,000 forgiven over 5 years, and there are income restrictions, but it's just another opportunity to try to increase affordable lending here locally in our market, as you mentioned, even nationwide.
Right.
And with the goal of putting more first-time home buyers in homes.
Yeah. And I mean, that's exactly what it is. We've talked about over and over again, the current platform for Fannie and Freddie and really FHA included, it's home affordability. It's home ownership. And this is just another product that adds to that we're starting to see come out just to kind of echo that mantra that's out there.
Correct.
So again, lots of free money there, up to $20,000, right?
Correct.
I heard you say, I mean, that's pretty pretty amazing and forgiven. Not even completely like you don't have to pay it back like other programs. So I did a whole episode on credit card debt. And I kind of got in this rant, and you're like, oh man, I forgot to tie the whole episode together with a bow there. And I had to go back on the next episode and do like a whole infomercial at the very beginning. But guys, I'm not big on home equity lines. Like we talk about why it's not. I've stayed up in front of real estate agents and I'm like, I'm not big on home equity lines because I don't believe in taking, all of your credit card debt, putting it on another revolving credit card that's secured by your home. I just don't think it's a great idea, especially when I've seen that not get paid off in a timely manner. I actually had an agent in a meeting that I was at. Great question by her. She goes, yeah, but what if someone's just going to pay it off in 2 years? What's wrong with a home equity line? I'm like, there's nothing wrong with a home equity line if you're going to pay it off in 2 years. But the reality is most people don't, unless they're selling a property and obtaining that cash right away, or they're inheriting money. They just don't pay it off. And quite frankly, the rates on these home equity lines are so high right now. This product we're about to talk about really dwarfs the idea of having a home equity line. So, I'll kind of button it up and be quiet and let you take it from here. But I love this product. Can't say enough good things about it.
Yeah, well, let's talk a little bit about that. Before we get there, just real quick on the grant side of things, I did want to make mention that Fannie Mae and Freddie Mac also recently announced a $2,500 credit that home buyers that fall within certain income limits are eligible for. So that is something that can be used outside of some of these other programs we talked about. But essentially, traditional conventional loans There are 3% down conventional loan products that now the buyer can get $2,500 that can go towards closing cost or down payment.
Okay.
So talking about affordable lending, there's a couple different things here that, like you said, that's been the hot button of the current administration, the agencies. And so it's nice to see a couple of those things that just more options for home buyers to be able to take advantage of.
So I clearly jumped the gun on the second mortgage there, missing that part there, but I'm glad you brought it back.
These home equity loans are so exciting,
Well, this one in particular. I mean, I can't say enough good things about it, obviously.
Yeah, and there's a couple different products that we have at Bank of England, and put this in here because I think a lot of times, if you're a real estate agent, you might be thinking home equity loans don't really have a place in what I'm doing with buyers and sellers, right? Which, yes, it's true. You're not involved in obtaining a home equity loan for a customer, right? But I think it's important we can talk about some of the ways that these programs can be used in a way that does benefit real estate agents as well, and obviously the end consumer, which is what we're really here for. But with respect to home equity loans, we have true home equity line of credit products like you would normally expect, where it's an adjustable rate line of credit. You pay on what you use. And we've also got a product that's what's referred to as a home equity loan, essentially meaning that it's a fixed rate. So you still have access to use it like a credit line, but it is a fixed rate product.
Now, does that happen often on second mortgages? I mean, do you see that? In your career, have you ever seen something that's like that?
Well, I will say that generally on a fixed closed-end second mortgage, you generally don't have the ability to draw on it, pay it off, draw on it again. So usually when you fix the rate, you lose the credit line functionality and it just becomes a closed-end second mortgage that you're paying off. So if you've got somebody that maybe doesn't want to use all of the funds initially or wants to have access to it again, you generally don't see that on a fixed rate.
Yeah, so this is kind of taking the best of both worlds.
Correct.
It's kind of taking that flexibility of a home equity line and eliminating the stuff that I don't like on there, which is the revolving side that just keeps going with that minimum payment and treating it like a credit card.
Correct.
I think that's why I'm so high on this product, because someone actually got it right.
Well, and it's a 30-year fixed amortizing payment.
That's the biggest win here.
So if you elect to go that route, you know that when you make the payment every month, that principal is being paid. Whereas on an adjustable line of credit, generally for the first 5 or 10 years, called the draw period, you're only required to make interest payments. So if you're making the minimum interest payment, that's a tough word for me to say at 4:30 on a Wednesday. But if you're making the minimum interest payment, you're not paying any principal.
Dan, let me ask you a question. You ever had a home equity line?
I have, yes.
You have. Okay. When you had your home equity line, now I recognize that this is a setup question for the audience. I knew you had one. You had it on a property that you sold. When you had it, did you notice that it unless you paid chunks, and I mean massive chunks, the balance never really came down?
Correct.
Yeah, it just stayed. It hovered. It was almost like it would just get enough above water, and then you'd pay it and it'd go even higher above water, right? It would continue to go. One of the things that, and people, I had a comment on, I think it was like YouTube, you can check it out at What's Your One More on our channel there at What's Your One More. But I had a comment where someone was like, why do you hate home equity lines so much? Like, what is it you have? Not all of us cannot get one. And I was like, that's a really good question. And then it dawned on me, like, you know why I don't like them? Because I personally had an experience in 2006. I got a home equity line during this market turmoil crash. And I was like, oh, I need to get a home equity line because I need some, what if money or, money, something could go wrong. And I started getting these notifications, my friends and family and colleagues, that they're just cutting everyone's home equity lines off. I was like, crap. So I went down and withdrew all the amount and took it out of there and was able to get it. But then I recognized, hey, listen, here's this home equity line. I'm getting buried in it. The house is going down. The value's going down. Now I'm upside down on the home. But the home equity line, no matter how much I paid, this thing continued to just expand. And then what happened was at the end of 10 years of owning this home equity line, because at that time I didn't have the money just to pay it off, it went into a 15-year AM at the market rate that day. And holy cow, did that payment go up? It went from something that was kind of manageable to like, what the hell just happened?
Right.
And I was in the business. I can't imagine people that are not in the business that get into this thing. They're working with a minimum payment and then they're chugging right along, budgeting, and then boom, next thing you know, it's like, crap. This payment's 4 times more than I thought. And at today's rates, that could be dangerous.
Yeah, if you've ever had an escrow shortage on your first mortgage and you've gotten a little payment increase, that pales in comparison to going from a 30-year amortization interest-only payment to a 15 or 20-year fixed principal and interest fully amortizing payment. So that payment spike would be the equivalent of, a 5x increase in your escrow.
100%. I mean, that will smack you in the face. That'll make you go, well, what the heck? And, no wonder people were defaulting on stuff back then, because, I mean, that's a whole nother level. That's a whole nother playing field, right? And so that is one of the reasons why I'm against home equity lines, because yes, it's in the fine print. Yes, it's there. No one reads that fine print. I don't care what they say. You never understand the magnitude of what happens when that thing goes full am. And that's why I love this product, because it's 30 am. And you know what you're getting the entire time with a fixed rate.
Yeah, I mean, I think now that we've downplayed them a little bit, let's upplay them a little bit. And I'm of kind of the opinion of home equity loans, when used responsibly, are a very good product. I'm also of the mind that, hey, listen, your equity in your home is a fictitious number until you can use it.
Sure.
So used responsibly, I think it serves a great purpose. And some of the things that we're talking about here, in my opinion, are great purposes. Mm-hmm. So, and keep in mind, some of the things we're going to talk about here, some of it's applicable to the line of credit option, some of it's applicable to the fixed rate product. But amongst the two, essentially, you can use it a few different ways that we see most prevalently. One is in the event that somebody has a home with a lot of equity, and their plan is to essentially want to sell their home after they close on the new home and simply pay off the new home in cash.
Right.
The home equity loan is a way to essentially go ahead and take that money now, structure it as a cash offer, and then be able to quickly eliminate that problem where you have to sell afterwards. Also gives you more negotiating power if you wanted to go in on the new property as a cash offer instead of coming in with financing. Maybe gives you a little bit of leverage from a negotiating standpoint.
Sure.
So we do have a bridge loan product that is available that can be used to purchase a new property. No prepayment penalties. If you sold your house the next week, pay it off, no problem.
No problem.
Another way that we see these used in a constructive way is funding the down payment for a second home or an investment property. So if the numbers work out in a way that where it makes sense, where taking out the payment on your current home and purchasing the next property as an investment or second home, if those numbers work out favorably, then it's a great way to be able to use that equity and not have to tie up some of your own capital. Obviously, investing in real estate can be a capital-intensive endeavor. So that's something that we've seen quite a bit for good investment opportunities. And one of the things you mentioned a little bit ago is using a home equity loan to consolidate higher interest debt.
Right.
And I think that's really where the fixed rate product can be a great option, is when you're talking about consolidating debt. Is the rate on a home equity loan as low as a first mortgage? No, it's not. But average interest rate on a credit card is 25% plus right now. So what's 10, 11% on a home equity loan? If you're able to consolidate those and save money and not touch your first mortgage, there's a place where maybe a full cash out refi actually could make sense as opposed to doing a second. But there's also situations where doing the second ultimately probably makes more sense than refinancing your entire existing loan.
Yeah, I mean, in that scenario, that home equity line, you're net 14% to the better.
Sure.
Credit card debt versus home equity line interest rate.
And there's a light at the end of the tunnel with paying that credit card off, right?
Correct.
And then the last thing, I think that if you're a real estate agent listening, you can use a home equity loan for renovations or repairs to get the home list ready, right? A lot of times homes are listed. We get a lot of questions in scenarios, but a lot of times we see a home listed knowing that there's some big problem and the seller doesn't have the money to fund it until the home sells, which is fine unless you've got issues from a financing perspective that makes the home unlendable, creates issues for homeowners insurance, creates other dilemmas. Maybe the customer then has to go get a renovation loan instead of a traditional loan. So I think a home equity loan could be a great option to say, can we take out a little bit of money, do some of the things we know need to be done so that we can sell this home quickly and we can sell it for top dollar.
Right.
So we talked a good bit about home equity loans here. Maybe there's some of the reasons why you wouldn't use them, but I think these are 4 different ways here that makes a lot of sense for why you would use them.
Yeah, so let's do a quick recap here. So we talked about 2 different second mortgage products: the traditional home equity loan, which everyone has ever thought of when they think of home equity line, and then, again, not my favorite, and then probably the one that I would endorse and recommend would be the 30-year fixed, where the first 5 years, it gives you the flexibility to withdraw, pay down, and treat like a home equity line, even though the rate is fixed for 30 years and you know what that payment's going to be on the remaining 25 based on month 61 of what your initial draw or final draw is on that. Can't say enough good things about that product, but I understand where there's a need for the home equity line. And to your point, there's a lot of different options in which you can use them. And I also want to say on this product that after standing in front of a room filled with a combination of about 100 agents over the course of 2 weeks, we had multiple people have customers apply instantly because of talking about this. And what you find is there's a real need due to the lock-in effect. There's a real need for people to get to that equity at whatever level it is: credit card, repairs, renovations. I mean, the list goes on and on. Buying a second home, college, it doesn't matter. We know that life's different right now for a lot of people, and that it's just the cost of living is expensive, right? But it's amazing how many people will talk second mortgages real quick over tapping that first mortgage at 4% or below. So I think it's a great product. I'm glad that you guys offer that, and I'm glad that it's available. We're going to have the link in this YouTube channel to where you can schedule an appointment with any of our team members over at Bank of England. And that's it. What's your one more in the YouTube channel there? Take advantage of that. It's going to be a great opportunity. And these are pretty seamless. Like, these close rather quickly, correct?
Yeah, we had one of our LOs had loan officers had a customer the other day that said it took him 26 minutes to get approved. So
that's pretty quick.
The power of technology working in our favor for once, instead of just adding to loan costs and making for more confusion for mortgage companies.
Yeah. So as we kind of move into this next segment, I like this one because it doesn't matter what environment you're in as far as today's rates, 2020's rates, doesn't matter, right? This is a topic that I think if you're a real estate agent, and I think if you're a customer looking to buy a home or potentially refinance or be a future homeowner at any point, whether it's move up, first time, it doesn't matter. This is the segment for you. And, I know you're going to reference episode 128 where you talked about that, but this is how a customer or a future buyer can get the best rate on their mortgage. And what I want to preface for our handoff to you here is that whether you go with Daniel and his team at Bank of England, or you're working with a loan officer at XYZ Mortgage Company, this is how you do it. Like, this is industry standard right here. So whether you work with Daniel and his team, put your listening ears on, because here's some really good in-depth knowledge.
Yeah, this is a completely free resource. It's the first of many that we're going to be releasing for home buyers. It's applicable for refinance loans as well, but it's probably more geared towards buying a home. And at the end of the day, like you mentioned, whether you work with us, you work with somebody else, we want to be able to provide really good information so that
I appreciate that.
So that more people can be homeowners and more people can be successful homeowners. That's the goal, right? Yeah. And the better we do a job of that, hopefully the more that Bank of England will benefit from that over time.
100.
But the general premise of how we would use this, essentially what we did is we did some of our own surveys along with others, and we determined that 60% of consumers said that interest rated fees were the most important thing when they picked a mortgage company.
Okay.
So when we're thinking about what's the most impactful marketing piece we can make, obviously secrets to get the best mortgage rate is the first thing that came to mind. Mm-hmm. And the way that I would use this right now, if you're a real estate agent, or a loan officer for that matter, if I asked you if you had customers that were waiting on interest rates to improve before they buy a house, probably would say yes. If you didn't, you're either a really good salesman or salesperson, or you haven't been talking to anybody.
Correct.
But the way that I would use this right now is, listen, there are people out there that truly are going to wait for interest rates to come down, despite what things could happen with home prices being higher, with more demand in the market, right? There are certain people that are probably just not going to make a move, right? So for those people, we want to be able to stay in touch with them. We want to be able to give them valuable insights and information and educate them so that when they're ready to make a move, they're in the best position possible. Mm-hmm. So if you're a real estate agent or a mortgage loan officer looking at this guide, what I would do is I would share this with your clients that are on the fence, give them a major takeaway or two or three from reviewing this, and stay engaged with them, give them something to work towards. And we really did pull the curtain back on everything that lenders are looking at when they determine interest rates. Some of it may not apply to every single lender on every single loan, but these are all the things that people are looking at.
Right.
And we're within reason. Yes, if you read this guide, you could probably leave us a comment and say that we left something out. But within reason, the things that hold true over time, we want to be able to look at this guide in a year, 2 years, 5 years, and say all of these things, or most of these things, are still the same, right? They still hold water. So really at the end of the day, we want to be able to provide this information. We want people to be able to benefit from this. And whether it's with Bank of England or otherwise, go out and get the best rate that you can. Last disclaimer, no, it is not called how to get the lowest interest rate. The reason for that is because the lowest interest rate is not always what you're looking for. And we talk about that in the guide. If you're a seasoned homeowner, you probably know what I'm talking about. If you're a first-time home buyer, you might be wondering, well, well, why would I not want the lowest rate? There's some information about that in there. At the end of the day, the goal is to get the best interest rate based on your financial picture, your goals for the property, your lifestyle. There's a host of different reasons that we say the best interest rate, not the lowest interest rate.
Yeah. And I love that we pull the curtain back in this. There's a lot of things that lenders don't necessarily want to share with you. There's a lot of things lenders don't feel like they need to go through with you.
Or they may just not think to share that with you.
Or they may, okay, fair enough. They may not think to share it. But what I love about this is it's like, hey, listen, we're going to give you these X amount of reasons and things that you can do to achieve the best interest rate for yourself. And, it's free. That's the other thing. It's free. So, if you want to get a copy of that, go to our YouTube channel. What's Your One More? It's going to be on there. The link will be on there to get this. You mentioned feedback. If you read this and you find something that we missed in there, tell us.
Please
Love
do.
to get your feedback. We'll update it. We'll put it in there if we feel it suits and fits the needs. And there could be some stuff in there that we missed. But here's the thing. And if you're listening to this, you might be going, what the heck are they talking about? Like the lowest rate isn't the best deal for me. Number one, I challenge you to read this because you'll see. Also, I challenge you to go listen to episode 128, where Daniel went through the whole explanation on this. And what you'll find is that to get the lowest rate out there that you're trying to achieve often comes with a significant cost. And if your plan is not to live in that house for at least 5 years, which the average survey shows that most people don't, that might not be the best deal. And he explains why. So I don't want to take any more from that, but it's worth reading, worth listening to. And, if you're a future homeowner, current homeowner, if you can get your head around this, really you can kind of set yourself up for really good success in all the future loans that you're going to do.
Yeah, the last thing I'll say about this, for the people that don't like to read, there's a smart mortgage guide here that's a condensed version for the people that really like to know everything. We've got the long form. There's also full audio, full YouTube. You can go to howtogetthebestrate.com to get a copy of this as well, in addition to the show notes. If you're technologically challenged like me or driving and not going to look at the show notes later, howtogetthebestrate.com, you can go get it there.
Yeah, I love that. So guys, hey, if you like what you're listening here, tune in for episode part 2 because it's going to get even better here on the interest rate side of things. Daniel, thanks for being on the show. Always enjoy having you here. Appreciate your expertise, your time, putting this together. All the great stuff you're bringing to the table for our audience. Greatly appreciate it.
Yes, sir.
Guys, if you like what you're hearing, please 5-star review this podcast. We're on every platform that you could possibly find your podcast on. But if you do me a favor, if you go to Apple, please leave us a 5-star review, leave us a comment. That's really important. Subscribe to our YouTube channel at What's Your One More. All of our socials are at Your One More with the number 1. Till the next episode, we'll see you here back for part 2.
I got one more shot, I'm gonna make it. One more chance, I'm gonna take it. I meant it when I said it, now it's time for me to do it. I got one life to live, so I put my all into it, yeah.